So we talked about bad debt and the uncollectible portion of the receivable that you might not receive. There's two methods that your course covers and your book covers. One is called the allowance method, and the second method is called the direct write-off method. We have the allowance method and the direct write-off method. Write that down. Those are two methods that we use to actually determine the uncollectability of an account receivable. Under the allowance method, we have what's called a contra asset that is called the allowance for uncollectible accounts. The contra, as we talked about before, where we dealt with accumulated depreciation being a contra to the actual tangible asset, a contra means to offset, means to reduce. The contra asset reduces the asset called accounts receivable. Contra means opposite. It means to offset or to reduce. On the board, I show you an example, and we'll get into the example in your text. You have the account receivable control account, which is at $10,000. That's the control balance. We then have an allowance for bad debt. Let's just say, based on experience, 2% of all accounts receivable will not be collected. 2% of all of our accounts receivable, based on our experience over the years, won't be collectible. So what we create is an allowance for that 2% of $200 that won't be collected. Thus our net accounts receivable in this problem is $9,800. That's how the balance sheet we're presenting. You are basically using an estimate, a fair estimate under generally accepted accounting principles to account for and make a provision for the amount of the account receivable that will not be collected based on your experience. Let's see what the bank does, what the book says. You're going to debit accounts receivable and credit sales for any credit sale. We know that and we see that. Then we're going to debit what's called bad debt expense. Guess where that goes? That goes on the income statement. Why? Because as you know and as I know, all expenses go on the income statement. So you're going to debit bad debt expense and you're going to credit the allowance for uncollectible accounts. That allowance is the contra asset. Write that down. It's the contra asset to accounts receivable to arrive at what's called net accounts receivable. So now we have that allowance for uncollectible accounts being credited. We're debiting bad debt expense based on experience, and in my example, 2% is our experience rate. We are going to debit bad debt expense and credit the allowance to record our estimate. Now the book takes it one step and shows you here, as I showed you on the side, how it is actually presented on the balance sheet. You're going to have the accounts receivable, less the allowance for uncollectible, and showing the net accounts receivable, which is after considering what's called the net realizable value, which is called that in your book. That is net accounts receivable after considering an estimate of what won't be collected. That is a most plausible and reasonable way for any company to predetermine based on experience what amount of that account receivable may not be collected. Let's look at how the book goes into a more detailed problem, and we'll talk about that detailed problem according to GAAP and how it relates to the actual write-off of an account receivable, and then we'll get into the allowance method. So now, as you can see, we're actually going to write off an account. Let's say, for example, an account was not collected. We made a provision in the allowance of $200. Let's say $1,000 of that $10,000 receivable in my problem will not be collected. The journal entry to record it would be a debit to the allowance for bad debt, and your book calls it uncollectible accounts. and you can call it uncollectible accounts if you want. You would debit that $4,000 in my example, and you would credit accounts receivable $4,000. You are now reducing the receivable because in my example, $1,000 was written off. So you can see in this situation, we had a provision for only $200 to be written off, but we had in actuality $1,000 being written off. And you can see in that example, once you wrote it off, you have to do that journal entry. Now you're going to have to recalibrate your estimate because you underestimated the amount that was going to be written off. We'll see how that works in the allowance method in a full blown out approach in just a few minutes. Read this, write it down. We're coming right back.